The world is changing fast. New technologies are impacting how we think about products, services, and the way we live our lives. Nowhere is this trend more present than in financial services, where new business models and customer expectations are changing our conceptions about banking, finance, and the very nature of money. Welcome to Rebank, a visionary podcast about banking, Fintech, and the future. The future of banking is here. Hello and welcome to Rebank. I'm your host, Will Beeson. This week, we look at the massively important topic of Fintech for small businesses. Joining us are Edward Berks, head of Fintech at Xero, a cloud-based accounting platform, Caroline Plumb, founder and CEO of Fluidly, a cash flow forecasting tool, and James Haycock, founder and managing director of Adaptive Labs, now Idean, following their recent acquisition by Capgemini. These three guests bring a wealth of experience solving problems for sole traders and small businesses and are excellently placed to explore today's topic. During the conversation, James mentions a report his team did on SMEs, which we'll link to in the show notes. As always, connect with us on Twitter, Facebook, LinkedIn, or on our website at bankingthefuture.com. If you like today's episode, please subscribe on iTunes or your podcast platform of choice and leave us a review. Thank you very much for joining us today. Please welcome Edward Berks, Caroline Plumb, and James Haycock. Edward, Caroline, and James, welcome to Rebank.
Hi. Thank you.
Thanks for taking the time to connect with us tonight. I think this will be an interesting conversation. So the theme we kind of agreed made most sense to dive into, given everyone's interests and I guess everyone's day to day, was really the concept of this potential convergence between banking and accounting and other sources of data for SMEs, small and medium-sized enterprises, who traditionally haven't been served all that well by the incumbent banking sector. Maybe just to kick things off, quick intros so people can identify voices, match them with names. Edward.
Hi, well, thank you very much, Will, for having me here. So I'm Edward Berks with Xero. I look after our strategic partnerships across Europe. And I'll talk a little bit as we go through about what that's about. But we have a whole bunch of ecosystem partners and spend a lot of time dealing with banks and fintechs and lenders to solve exactly the sorts of problems that you're highlighting as we frame up.
Yeah. So people are probably familiar with Xero, but quick.
Yeah. Hey. So at our core, we provide cloud accounting for small businesses. We have 1.4 million small business customers globally. And the accounting part of that kind of forms the central piece of a platform where we're bringing together a whole bunch of application partners to provide vertical and horizontal application extensions to accounting, and then increasingly, as I say, bringing on board banks and lenders to address a number of financial services needs for small businesses.
Caroline.
Hi, great to be here as well. Thank you. Yes, I'm Caroline Plumb. I'm founder and CEO at Fluidly. We're a VC-backed fintech business focused particularly in the area of cash flow forecasting and management. We really believe that forecasting is the gateway to all financial decision making. Before you take out a loan, before you decide whether to borrow money at all, whether hire a new person or move to new offices, the first thing you do is plan your financial future. And we use machine learning to take the data in accounting packages and use that data to automate the forecasting of a business's financial position. Before Fluidly, I was an serial entrepreneur. So built my first business up in London, which is in the consulting space. And there I really felt firsthand the pressures of, running a business day to day, but also running the finances of that business. So I really spent a lot of time understanding lots of different types of working capital finance more broadly, but also some of the challenges firsthand that small businesses face in accessing that finance and managing their cash flow.
Great. James?
Thanks for the invite, Will. Great to be here. So my name's James Haycock, and up until a few weeks ago, I was the managing director and founder of Adaptive Lab, we recently sold our business to Capgemini, and we're now part of Idean, which is a global design agency. And so we help big businesses to transform through design. And so we help them find growth by either launching new products and services, what we call beta businesses, or we transform their existing businesses. So we do quite a lot of work in the banking space. We actually wrote a book a few years ago called Bye Bye Banks back in 2014, which talked about the changes taking place in the banking industry, what was driving those changes and how banks could respond, and talked about the idea of a beta bank, which is a greenfield bank, which we thought the traditional players could launch to respond to the arrival of lots of new fintechs. We actually also wrote a report on what we call smallish misunderstood enterprises, SMEs, because we saw it as a huge growth area, but an audience that banks and other service providers really don't understand. It's a big growth opportunity, a lot of ambition in the space, but big businesses, particularly banks, just don't know how to engage with them. They lack empathy. And so it's great to be able to come and talk a little bit about that topic with you.
Great. Edward, maybe given where you sit, in part because of your role, in part because of the reach that your organization has, and indeed the track record in the context of fintech. Wow, it's got to be one of the grandfathers, right? So maybe you can kind of, walk us through the opportunity that Xero saw and sees in terms of connecting pieces of the accounting, financial services, banking world to make it easier for small business to focus on their work.
Yeah, that's a big canvas right there. So we talk about frictionless finance as a concept, right? Which is recognizing that small businesses have a relatively small set of key financial services requirements. The first of those being just understanding their cash position. Can we make payroll this Thursday? And in order to do that, you need to pull out data from your bank accounts, and then they may be multiple. You need to make sure that your accounts are reconciled, and so you need good control of your payables and your receivables. There's a little more to it than there really ought to be. Getting paid, really important for small businesses. So we partner with the likes of Stripe and PayPal and a fantastic London-based business called Go Cardless in the direct debit automation space.
On the podcast.
Yeah, okay. So look, we love those guys doing great things with them and our base of accountants. And we know that businesses that use payment services get paid 50% more quickly than those that don't. So that, from a cash flow perspective, is also important. Making payments, payroll and reimbursing expenses and settling bills and taking the stress out of that is another area. And then probably the big one is accessing capital when needed. And there's a host of challenges there that start off, I think, with the fact that a lot of small businesses don't understand the discipline of cash flow forecasting and budgeting well. Some of the accountants that support small businesses do a great job, but it's not uniform. There are some great new technologies coming through to kind of help ease some of those challenges. And Caroline, I'm sure, from Fluidly will talk more about that. But at the point that you recognize you need to access working capital, the sources of that are still pretty limited, and the typical experience for a small business accessing capital from their bank, even if they meet the risk profile of that bank, is a 6 to 8 week cycle. And again, just the kind of timescales that these guys work to, the cycle times of small businesses is such that we're still seeing a lot of viable small businesses failing each year. Just because they are unable to access working capital. We did a piece of work that suggests that in the UK alone, 50,000 businesses annually fail due to the results of poor cash flow management and then their inability to access capital. Again, I think we'll talk some more about it, but there are some really positive developments happening with the likes of iWalker and Market Invoice, some great digital lenders who are breaking the mold in terms of experience. We see iWalker, one of our lending partners, turning around decisions and depositing funds in 30 minutes. That's a very, very different experience for small businesses. And all the banks who still control probably 85 to 90% of small business lending recognize the issue and I think genuinely want to do better. So we're seeing significant investment in digital platforms and projects that I think will deliver results. But it's a problem that's far from solved right now.
Well, I think that those of us who kind of work in the space, and the four of us around the table certainly do. are almost, I know I'm personally surprised that there hasn't been kind of quicker development in the space of a lot of the interconnected systems, interconnected experience that you guys at Xero support, that Fluidly are in the process of delivering. It just seems like we should already have systems where small business owner logs on, they automatically know their accounting position. They've got an offer for, what's the best way to raise money today to meet these upcoming cash flow requirements. Here's an invoice finance proposal from Bank X who's plugged into the platform. I think we're moving in that direction. A lot of things are starting to happen. It would be good if they started to happen a bit more quickly.
So what you described there are some of the demo concepts that we have, and it was not that long ago that Xero was a cloud accounting player, right? And so at the core, we bring to the party there great visibility of payables and receivables. We bring that forward-looking view that, again, banks and lenders typically don't otherwise access. I think the big banks have been pretty distracted over the last few years with a whole heap of regulation post the financial crisis. I think that's well understood. And so as we sit down with execs from banks who kind of want to make a difference here, they just know that their resources are tied up in ring fencing and open banking, and a whole bunch of other things. And so I think you're right. I think conceptually, all of the integration that is required is possible. I think the role of the accountant is something, again, we should talk about, because it's interesting. We talk to small businesses sometimes who don't really understand the difference between investment capital and working capital, for example. And so small businesses, I think, need that advice and support. And so putting some of that advice and some of the tools, or the insights, I should say, and some of the tools in the hands of accountants is also important. And again, we see banks beginning to wake up to this, but it's not here quite yet.
Yeah. Well, maybe Caroline, you can step in here. So Fluidly is definitely starting to deliver on this same premise. I guess I'd be interested to know, and maybe it kind of will guide this conversation into some interesting areas. Why now for starting Fluidly? Like, why is there an opportunity now? Is it, technology? Is it data availability? Is it customer appetite? What makes now the time? Yeah,
I think it's all of those things and more. One of the reasons that cash flows, forecasting, cash flow management has traditionally been done by modeling. You make a model or you kind of cross your fingers and hope. But actually, for the first time, data is available at scale, whether that's through banking APIs or through accounting APIs. But you can now access a very rich transactional information. And so let's make a data forecast or data solution around that. And that's really the first time that's been available. It's a tipping point of cloud accounting, it's PSD2. And actually, from our perspective, being an AI machine learning orientation, it's also the availability of scale algorithms that allow you to deploy very sophisticated models at relatively low cost in the cloud. So we can use that technology that others have built and deploy that at scale.
James, from where you sit, how do you view the current landscape with respect to SME offerings, both on the banking and accounting and forecasting side, and what are the most obvious opportunities for improvement?
So I think there's a tremendous number of opportunities, and I think the banks, as Edward was saying, are aware of it, but they just have a challenge in actually responding. So for a number of years, they've prioritised the consumer offering, or they've invested very heavily in the corporate banking space, and SMEs have unfortunately been caught in the middle. They've either got a watered-down corporate solution, or they've got a slight variant of the retail solution, and they haven't really been sort of appropriately addressed. So if you speak to any people leading the SME businesses in the banks, they're very aware of the opportunity, the growth opportunity. They have a reasonable understanding of the challenges of being a small business. Not all do. I think some lack the empathy of what it means to actually be days away from not having any money left in the bank, to be honest. But they've really struggled with prioritisation. And so we've seen a number of banks have great ideas but really struggle to bring them to market. It might be because they're piggybacking the retail mobile banking app, which means that it's very hard to bring in new data sources like cloud accounting or other sets of data like pipeline data or other things they could bring in to build a richer forward-looking view of a SME's position. I think ring fencing has created more drive around it, and then the availability of funding later this year through the Williams and Glyn, I guess post Williams and Glyn initiative, has driven a lot of them to be, take it a lot more seriously. So I think, or I hope,
so just for listeners, that's basically an agreement between the UK government, the EU, and RBS, one of the biggest banks here, to basically support RBS in funding to the tune of 775 million. A package to support competitor banks in taking its SME customers and developing their own technology to improve business offerings and compete with RBS. And this is all following on from the post-2008 UK government bailout of RBS and the stake that the government still owns in the bank.
Yeah, from that, and also there's the CMA report, so the Competition and Markets Authority, about driving greater competition in the retail and SME market. And so what's happened off the back of that is the challenger banks and fintechs have sort of realised this opportunity and are now, well, the fintechs already were, but the banks are now taking this slightly more seriously. So they have plans at various stages of development to pursue that money and then build out better SME offerings. And so fingers crossed for the SMEs, this time next year we might actually start to see some of that coming to market. I also think actually what we're seeing, and hopefully you're seeing a bit of this, Caroline, is that there's a lot of opportunities for collaboration, because the banks are seeing the opportunity but still struggle to deliver great digital experiences, and so are looking at ways where they can partner with brilliant businesses like Fluidly, like Xero, to build very rich, compelling experiences for their customers.
Yeah. Well, I mean, I'm not going to let the incumbent banks off the hook quite so easily. I mean, I think at the end of the day, it has been a business decision for a number of years to not pursue a less economically, commercially, financially attractive segment, right? So on the retail side, things like overdrafts, credit cards, mortgages drive revenue. On the corporate side, relationships, lending-based relationships with large companies kind of move the needle. Delivering to a large number of very small businesses, which requires often, there's more complexity, so more either human intervention or time to underwrite lending. It's not the most attractive part of the business. As a result, if you've got a multi-100 billion pound balance sheet, well, how do you generate revenue? It's focusing on that massive retail market and the profitable mid-corp market. I think where we are at this particular moment, given what availability of data, what interconnected systems, what new technology supports, is really this kind of renaissance in banking for small businesses. And it's not the incumbents who are leading the way. I do feel like built for purpose, SME focused businesses, whether they're banks who are built with technology first, with a more economically viable model in terms of serving those customers, whether it's straight through automated lending platforms like Iwaka, who was mentioned before, Cabbage, and many others, and supported by the likes of the Xeros, the Fluidlys, and the other services, analytics tools that are built onto the top. I mean, I totally see that being the way that this plays out. Edward, I'd be curious in your thoughts.
Yeah, I agree. I mean, I think there's political pressure on the banks to progress this issue, and so the headlines will see HSBC, I think, with £17 billion committed to small business lending. Lloyds unveiled maybe 4 months ago a £6 billion package that was centred around small business lending. So again, I think there's an imperative to do it. I think James's point about partnerships is where we'll see real movement, because I think the likelihood of the banks standing up digital systems that are kind of world class in terms of their agility and experience is just unlikely, and so I think we will start to see better experiences through partnering with, again, the likes of some of the Easy Bobs and Spot Caps and some of these guys who are kind of building out platforms that the banks can take and either white label or use to power their own services. Whether the bank's appetite to lend to small businesses fundamentally changes is a question. So there's clearly a certain risk profile of business that the banks want to take on and use their own balance sheet to fund. Digital lending promises to change the economics of lending, right? So the whole underwriting process, actually, if you think about the life cycle of a credit product or a loan, actually it isn't just decisioning, it's the application process, it's decisioning, it's monitoring the product, and it's actually some of the accounting associated with that. Digitizing that whole life cycle has the potential to strip significant cost from the process, and that ought to provide opportunity for the banks to lend to a broader audience of small businesses. That remains to be seen, though, whether that will actually happen. I do think what's also coming on the horizon, which is really exciting, is that some of the other forms of credit beyond, and if we think about what small businesses think of when they think about credit and access to capital, it's overdrafts, it's credit cards, it's term loans, it's pretty simple products. Coming over the horizon are things like supply chain finance and invoice finance that probably have seemed pretty esoteric to small businesses historically and have just not been available to small businesses because, again, something like trade finance or supply chain finance, the costs of evaluating a small business, setting up the products, bringing together the parties, just means that it's prohibitive for small businesses. We're really excited by businesses like Provise, which is another great London fintech, who have a really nice digital proposition that really is potentially very disruptive and allows small businesses to be paid at the time that they issue an invoice based on that invoice scoring appropriately through their decisioning process. And so, I think if we think about the underlying reasons that firms need access to capital, and again, they're unlikely to be micro entities. If you're an Uber driver or a landscape gardener or something, your likelihood to need to access capital is lesser than if you're a little more sophisticated, you're employing people, you're manufacturing. So that working capital requirement, I think we'll see being satisfied in other disruptive, exciting ways. And so, again, whether it's the big banks or whether it's the banks partnering with some of these new fintechs, my sense is it's probably the latter.
I'm not sure it's always just a supply side piece, though, that prohibits access to finance. Yes, the experiences can be sometimes a bit shocking. There's a lot of products out there, but actually the demand side from small businesses themselves isn't always there because they don't fundamentally understand the range of products available to them, or how to apply, or how to navigate the range of options and choices. In the UK, roughly a quarter of businesses have any form of financially qualified person in it, so it's very low, and so they rely to a huge extent on advisors like accountants or their existing bank manager to advise them on their range of options at that time. So I think just navigating that whole world and making that easier from the demand side will actually drive more access to finance. I think a lot of time SMEs rightly are focused on delivering to customers, making their products, serving their people, looking after their staff. Finance is sort of one of the last things they're really focused on, and yet it's one of the most critical. Yet it has to compete for the attention and needs across all the other range of things that they're doing.
Caroline, is offering finance a part of your longer term ambition? Is that part of the plan?
I don't think we'd be a financial lender ourselves, but I think we do know that forecasting is a gateway to decision making around financial products, and so for us it's about helping businesses plan their financial future and then optimize it. We think of Fluidly as a bit like an autopilot for finance, and when you think about what an autopilot does, is it continuously monitors where you currently are, it continuously and dynamically corrects where you're heading, and then it gives you forward alerting to the opportunities or threats that are in your way. So Fluidly is really an intelligence layer, a system for dynamically managing your cash flow.
And do you see SMEs buying it on a subscription basis, or do you expect to partner with like a B2B model where you're, I don't know, Xero's paying you to offer your Fluidly services on top of the Xero platform?
Right now,
Exactly.
No, we are a partner with Xero in terms of you can buy Fluidly as an add-on through the Xero marketplace. But we also, SMEs can buy on a subscription basis direct. But we also partner as well, and our key partners for us are accountants. So we work in the UK with 3 of the UK top 10 accounting firms and a whole host of smaller accounting firms to deliver our forecasting, both for those advisors that serve and help build those forecasts at the time, and also for their end customers directly. But also we have a paid proof of concept in progress with a large bank as well. So to your point about partnerships and progression of those, I think we see a load of players that are interested in this future financial space.
Mm-hmm.
And so if I'm just going to pick up on that point now, I think one of the things that businesses like Fluidly and Xero do is they're able to create value-adding services that people are prepared to pay for. Banks are always looking for a way of giving people loans and making money that way. I think actually they need to change their mindset and say, actually, what value can we bring to these businesses to help them run and grow? Now, sometimes they might need to borrow from us, which would be great. But actually, if we can think of ways to create value, maybe they'll pay us for that. And actually, the startups are able to come in and see those problems and solve them in a way where there is a clear exchange of value and pay for it. At the moment, banks are all thinking, how is it we can offer another loan? How is it, depending on what that type of loan might be. But actually, if you look at the sort of the life cycle of a small business, as it goes from startup through medium and onwards, there's a tremendous amount of opportunity, and so the scope is huge. Within that, yes, of course, there's lending opportunities, but there's a hell of a lot more.
Mm.
I mean, I think one of my reasons for starting Fluidly was my first business. We reasonable size, close to 100 people. You have a lot of people willing to offer you money all the time. Every day I'd open my mail and another lender would be offering working capital finance or a loan or some sort of product. But actually, I think what you want when you're running a business is to know, do I actually need money at all? And if so, in what time frame? And if so, how much? And finally, if so, well, who to take it from? But actually, I don't really want external finance if I can avoid it, because it's expensive and time consuming and I'm busy serving my customers. So actually, first of all, let me optimize my existing working capital, my existing finance, and then, only then, do I want to have a conversation about further sources of finance. And again, in the UK, we see only about 35% of businesses take any form of credit, any form of external third-party finance. And of those, that's mainly still overdrafts and credit cards, so simple products. So I think it's just, first of all, for a business, the primary interest is having enough money to make payroll, to serve my customers, to pay my suppliers. And after that, do I have enough money to am I spending my money wisely, and am I, funding my business wisely?
Yeah. James, what were some of the kind of the key takeaways from your report you guys just did?
So a number of different things. I think one of the things that struck us is that banks and other service providers think about SMEs in the wrong way. So they often think about them in terms of what's their turnover and how complex are they. And they think that those are both proxies for the amount of money they'll be able to make from them. Well, actually, those things aren't the most useful thing at any point in time. I think there are other ways to think about them, which might be about behavioural traits or ambition, which would suggest a very different type of way that you could engage and build services for them. So one of the biggest growth segments is the micro business. So probably some of the people that are populating the WeWorks all around here. And there's a lot of them, and there will continue to be a lot of them. Now, what you can do for them, if you were to look at them through the eyes of a bank, you'd think they're not very interesting. They're unlikely to need any capital, so we're probably not going to think of ways to service them. But it's a huge segment. It's going to continue to grow. And if you were to think about how is it we can help them simplify their life, we might have a joint proposition around their consumer and work life. There's a lot of opportunity there. But if you just think about them as being, the smallest end of small, you wouldn't ever bother playing there. But it's the biggest growth segment. Then you've got others that might be thinking about they're turning over a reasonable amount of money, but they're quite mature as a business. Their growth aspiration might be quite limited. It might be a great family business, but it's not necessarily going to go to drastic new places. So they then think very differently to a business that's a quarter of the size, but has the aspiration to be 4 times the size. And so these buckets that banks think about SMEs in, revenue predominantly is their sort of way of cutting them up, just doesn't fit. Because then if you're an SME, so one day, the fantastic business that Caroline built prior to Fluidly was probably a team of 2 or 3 people. At that point in time, they may not have been interesting to a bank, whereas now 100 plus that business is. But the trajectory they go on doesn't fit with how a bank's organised. And actually, the SMEs feel this. So when I started my business a number of years ago, I didn't even have a bloody bank manager. It was difficult to meet somebody. I couldn't get a card initially. And so that experience is really, really interesting, but it's frustrating. So one of the biggest things that we found is that banks and other large organizations don't use the right segments to think about their audiences and then use those segments appropriately to build the right services. Another thing is that they lack empathy. So running a small business is difficult. You do get to the point which is, okay, which way am I going to prioritize my payroll? Which one of these invoices am I going to delay paying? And those sorts of things are stressful, they're hard. Sometimes you're making those sorts of decisions for the first time. And people that you would meet in a bank, they've never worked in a company like that. So there's real empathy gap, which again, I think makes it very difficult for them to create services. One of the things that we were looking for is, once you've really understood your audience, we thought there's almost this tiering that you could think about. So the first is this idea of, functional needs. What is the day-to-day that we need to help solve? On top of that, we had this idea of emotional needs. So on top of the day-to-day, how is it that we can understand the emotional needs that a business owner or somebody running the finances for a business might have? And then on top of that, then there's these really interesting opportunities to try and create differentiated services. So that's where the sort of the behavioural mindset or the ambition of the organisation starts to allow you to create differentiated services.
Just switching gears slightly, and a question for you, Edward. I'd be interested to know. Open banking is now a thing in the UK and EU, and I think it's in the works in Australia and maybe other jurisdictions as well. How do you see open banking impacting what Xero does?
So I think it's one of a number of catalysts actually in the UK market. There's also Making Tax Digital. So all VAT registered businesses as of next April need to file their accounts digitally, which is a nice catalyst to get small businesses, and again the accountants that are probably going to lead them to this, to be thinking about how they digitize. So it's useful from that perspective. If we think about what we've talked about this evening, cash flow, understanding your cash flow requires access to a number of data sources, including, of course, your bank accounts. And so one of the first things I think open banking will do is kind of democratize what we call bank feeds, which are the data feeds that securely bring banking transactional data into cloud accounting platforms. We have a really strong leadership position there right now, and frankly, open banking ought to democratize that a little, but that will make cash flow forecasting easier. I guess another piece of accessing capital is around decisioning, right? And so again, I think one of the most common use cases we'll see in the business space for open banking is assessing or credit scoring loans and credit products, and again being able to access that banking data, or third parties being able to do that as part of their decisioning, will become easier, and that should be kind of slicker. So again, I think it'll be a slow burn. It's kind of interesting as we talk to the banks. There's been obviously significant investment made in laying down the APIs, getting set up to receive open banking services, and yet actually there's very little going on, particularly in the business space right now. So I think it was Caroline or James mentioned earlier that the bulk of what's been done in open banking is retail centric thus far. So I think it's foundational. I think it's positive directionally, but again, a slow burn.
Do you guys expect to apply for an AISP license?
Yeah, that's a great question. So we are waiting on our AISP accreditation from the FCA, and that will help us to deliver a better experience in bank feeds. We actually have pretty good bank feed coverage anyway, but it makes sense for us to take advantage of open banking, which I think is already going to be adopted outside of the CMA 9.
As a business owner, I would much rather spend my time in Xero, so which we use, than in my banking website, because it's awful. It's a really, really crappy experience. And so over the years, we've actually tended to do more of our finance management and consideration around the Xero interface rather than our banking interface. I think there's a very, very small shift that could happen that would mean that our entire relationship exists there. So the only reason we do log in is to initiate and make payments. As soon as you can do that from Xero, why would I bother going into this crappy interface? I just wouldn't at all. Now, interestingly, that solves one of the biggest problems the bank have at the moment, which is a cost to income ratio. If you can have third parties servicing customers day to day and potentially even selling the products that you'd like to sell to them, actually I can potentially remove a big cost base from my organisation. So it's this really interesting sort of conflict there, which is how do we reduce our cost to income ratio, yet how is it we retain control of the customer relationship because we want to cross and upsell. And so as a customer of Xero, I'd much rather manage and initiate payments from within the Xero interface.
And we are about to deliver that last piece of the jigsaw, by the way, so that you can make bank payments right out of Xero. That's coming as well. That's shortly to be launched in Australia, which is one of our bigger markets, and will come here and will be streamlined by open banking eventually. I guess philosophically, if you think about where does a small business want to spend their time, different actors in a small business environment might spend time in different applications. So if you're running a restaurant, you probably spend a lot of your time worrying about scheduling staff and booking tables and ordering inventory, and you're in some kind of application that allows you to do that predominantly. Actually, you might want to pay bills from there, right? You might want to understand your cash position from inside that experience, which is where you live. If you're a financial controller, if you're an accountant, you probably live in Xero, and that's fine. And then a lot of small business owners and managers, might be mobile and actually, are checking their mobile banking app in order to make payments, understand their cash position. And so I think directionally, what we ought to be able to get to, and I guess the point that was made earlier about this vision of things coming beautifully together is being able to access the insights and the capabilities that you need from whichever experience you choose to spend your time in. And so we absolutely do think that there'll be a level of convergence between accounting, banking and business applications as the services get componentized via APIs and then surfaced in these different experiences.
Yeah. Guys, I feel like we could spend all evening on this, but we should probably go ahead and wrap up. Maybe quickly going around in terms of where people can find you, any relevant contact information. James, you want to start?
Yeah, sure. So I now need to say something different to what I did a few weeks ago. So Idean.com is where you can find out more about us. So we help big businesses to transform through design. I'm James at Idean.com. at James Haycock on Twitter and LinkedIn /James Haycock.
Excellent. Caroline?
I'm at Plumb on Twitter or at Fluidly.
That's Plumb.
Plumb.
Right.
And also fluidly.com.
Okay.
So Ed Berks, Berks on Twitter, or find me at Xero.com.
Excellent. Edward Berks, Caroline Plumb, and James Haycock, thank you very much for joining us today.
Thank you for having us.
Thanks for tuning into Rebank. If you liked today's show, reach out. Follow us on Twitter at Rebank Podcast and join the conversation. For more on banking, fintech, and the future, check out our regular content at www.bankingthefuture.com.